Hi, I'm Ken Fryer, Chief Investment Officer of Atlas Capital Advisors. In this video, I'll share with you the approach that we use to make equity choices for our clients. Our approach uses what are known as equity factors. A factor is an attribute of a stock which has been shown by academic research to influence the future performance of a stock. The slide here shows some of the factors which have been validated by academic research and which Atlas Capital uses to create portfolios for our clients. A factor investor is able to create portfolios in a consistent, systematic, and disciplined way. Eugene Fama and Ken French, shown here, were pioneers in the research on equity factors when they were colleagues at the University of Chicago Business School. Both men have since won Nobel Prizes in economics for their work. Ken French continues to maintain a database of information about how equity factors have influenced stock market returns. That database is the source of the information that I'll show here and which is available on the Atlas Capital website. As an example of an equity factor, let's look at cash flow to price. That's the ratio of the cash flow per share of a stock to the price per share. Stocks that have a high cash flow to price ratio have strong financial fundamentals, and the academic research has shown that such stocks tend to outperform the stock market indices over time. As the Fama-French data indicates, an investor who owned the 20% of stocks that had the highest cash flow to price ratio would have earned 5.5% more than the stock market index on average over the past 55 years. Now, let's look at the momentum factor. With the momentum factor, we rank stocks based upon their performance over the past year, leaving out the most recent period. Stock market history in all countries and periods indicates that on average, stocks which have outperformed over the past year tend to continue to outperform. According to the Fama-French data, investors who owned the 20% of stocks which had the best momentum would have outperformed the stock market index by 6.6% on average over the past 55 years. Since factors can perform well at different times, it's better to create multi-factor portfolios. On this slide, we show the effect of combining the momentum factor with the cash flow to price factor. When multiple factors are combined, there's more probability of having positive outcomes in any particular year, and there are fewer instances of large drawdowns. I hope this has given you a flavor of the approach that we use for Atlas Capital clients. We create equity portfolios that lean toward the attributes that academic research has indicated are likely to lead to stronger performance, higher performance than stock market indices over the long term. If you'd like to have more information about factor investing, you may visit our website or please write to us at info@atlasca.com. Thanks for listening.